Hey there, Lincoln here from Volatility.org. Today I want to talk to you about my portfolio and how I lost $32,000 in the last 16 days ending October 30th, 2020. And to help me stay sane, I have my This Is Fine dog here because the markets are on fire. I'm losing lots of money and everyone keeps asking me, why is the market going down? Are you afraid? And I'm just here. Hey, this is fine. He said it. So we're fine. We're sitting here, we're fine. And I want to tell you exactly why I'm fine and what my plan is for getting through this downturn. So as you know, I'm a long-term investor and I always preach the bull mentality on this channel. The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance at success on the stock market. So I planned for this. I planned for when the markets go down. Back in August, my portfolio went down more than 30%. I'm still here. And since then, it's been up as much as 156% or even more. So I started investing in the stock market last summer, 2019. And I had $23,000 from a business sale that I just dumped into the stock market on companies that I believed in and planned to hold for the long term. And since then, it's gone up 50% and then down 30% and then up 150 some percent. And at the peak of my portfolio, it was at $107,000. That was from $23,000 to $107,000 in 16 months. And then when it goes up, it has to come back down at some point, right? So it went up and now it's back down $32,000 16 days after that. So now I sit around $75,000. So I've lost more than $32,000 in just 16 days. Hey, remember, this is fine. We planned for this. I have an emergency fund, and that's not even a savings account. That's a much safer portfolio of stocks that are blue chip, that are foundational to our economy, and there are companies that are established and won't be dying anytime soon. So I have that money over there, and it's safe, and it's grown by 22% because it also has a little bit of growth stocks in there like Tesla, because I don't like my money sitting still. So I have about 3 to 6 months of expenses saved away in that emergency fund. So worst case, if the market goes down 20% again, 30%, 40%, and I happen to lose my job or I have an emergency, I have enough money saved away that I can draw from and not have to draw from my growth portfolio. I want that growth portfolio to not be touched for the next 2, 5, 10, 20, 40 years. So I've planned for that. I've planned for these bad days. And the bad days are just getting started. Last week, I sent my patrons at patreon.boacademy.org, which you can join for $12 a month to support the channel and help the channel grow. I sent them a guidance about what's going to come in the market soon, before and after the election, especially around SPACs. And I let them know, hey, things are very bad right now. And guess what? It's going to continue to get worse before it gets better. The market will continue to go down. I don't know how far, we can't predict the future, but I do know the election is going to be very rocky. And then coronavirus is picking up. We're breaking records in cases and deaths are going to rise. And we're learning that COVID is a lasting virus. It's not like the flu. People who try to tell us that it's just another flu, we're dead wrong. And some of them are actually dead. Some of the politicians who said that are actually dead. So COVID is bad. Scientists are saying that COVID can eventually lead to neurological diseases, such as Parkinson's disease, which is a terrible disease that I wouldn't wish upon my worst enemy. So it's no joke. So yes, as things get worse with COVID, the market will react negatively. We've tried to price it into the market, but it continues to get worse. England is going back into a national lockdown, and the USA might follow. Of course, we're not going to do a national lockdown. That's not how this country works, even though we probably should, but that's not how we work over here. But we will probably receive guidance from governors and city officials that we should stay at home for at least a little bit to give our healthcare workers some time to handle the rising cases in COVID so that we don't overwhelm the healthcare system. So we might be going back into how things were back in April and March. Again, I don't think it's going to get as bad as that because we've seen this already. Although cases are rising more, we've already seen this. We have a playbook now, albeit not that great, but we have a playbook and we're going to use it and we're going to do better than last time. I'm not too concerned about the markets. I think they're going to get worse, but I have a plan. I plan for the long term. I plan to invest money that I won't need in the short term. But if I'm wrong and the market drops 80%, worst case scenario, I still have my job. I still make an income. I can pay my expenses. I won't have to draw from my growth portfolio. So I planned for this and I hope that you did too. Because if you don't have an emergency fund, That's when you get nervous. That's when you fall victim to all of the fear in the market. Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. You can't do that if you don't have a plan, if you don't have a way to survive the downturns. If everyone's fearful and you don't have enough money to pay your rent, you're going to get fearful too and say, hey, I can't lose that money in the market. I have to pull it out right now, even though I'm down 30%, 20%. I bought high and I need to sell low. That's how you lose money. You have to plan for the long term. The markets are volatile in the short term. They will go up and down. So you have to be prepared to survive those downturns and get through to the other side. That's what happened in April. In April, the market went down and I kept buying. So when it came back up, I was up even higher than where I started. That's because I had enough money saved away that I didn't have to touch my growth portfolio. Of course, I was fortunate enough to have a job that's secure. I'm a software engineer. Tech stocks are doing well too, and they are benefiting from the pandemic. So my job is pretty safe. And if I happen to lose my job, I can find another one within 2 or 3 months. So it's all about planning. That's why every morning when I open up my Robinhood account and I see my portfolio go down, I just smile and I hope I have enough money to buy more. And if I don't have enough money, I just go to work and try to make some more money and hope that I can get in at some point before the market turns back up. Because I am pretty confident that the market will turn back up as it has in the past. Of course, past performance is not an indicator of future performance, but we've seen it over and over again. We've seen the Great Depression, we've seen the Great Recession, we've seen so many times that the market plummeted and then came back higher, stronger. So we have very good reason, we have over 100 years to believe that when the market goes down, it will come back up. But in the same breath, we have to also believe that when the market goes up, it will go back down and then it will go back up, right? It's cyclical. We need to expect volatility in the short term. But that's why we practice the bull mentality, because we know that things will get bad in the short term and we plan to hope for the long term, because when we have that mentality, we cannot be easily scared. When everyone else goes to the mall and sees for sale signs and they run away, we run to the sale. It's a sale. We can buy things at discount. Warren Buffett also says, buy viable companies below what they're worth. Buy $1 for 80 cents. Buy $1 for 50 cents. If I had the chance to do that, why would I run away? Maybe I'll run back to my car and dig around for pocket change in there and run back to the mall and get more deals. So I never run away from deals. I don't understand why people do. Unless the company is bankrupt or going to be bankrupt soon, is in a bad industry like the restaurant industry or the retail industry, I'm going to run to that sale. If I see Facebook on sale, if I see Amazon, Google on sale, if I see Tattoo Chef on sale, or Open Door, or ChargePoint, or Tesla. I bought Tesla last year when everyone thought they were going to be bankrupt soon. I bought Tesla below $200 per share, and I had 10 shares. And within a year, everyone was chasing Tesla. And my $2,000 turned into $14,000 because I ran towards the sale while the crowd ran away from the sale. And when they realized that I was right to run towards the sale, they came back and tried to catch the sale, but now they were chasing the hype. And so they were buying Tesla at $2,000, $14,000, $15,000. And then Tesla said, hey, we're going to do a 5-for-1 split. And they said, whoa, nice. I'm going to buy Tesla even higher because I'm greedy when everyone else is greedy. Because I follow the hype. I invest on FOMO, fear of missing out. I don't want to miss out, so I'm going to buy Tesla as it rises, not as it falls. That's the silly way to invest. That's naive. The way you win as an investor is by having conviction in the investments you make, understanding your investments and believing in them, so that you can go towards a sale when the others run away because they don't know what they're buying. And it wasn't just Tesla. After I bought Tesla on sale, I went in and looked at Upwork. Upwork did a restructuring last year, and their sales went down. I happen to have experienced a restructuring in a company before. And when that happens, businesses don't make as much money because they're busy restructuring their company. So as everyone else looked at the sales numbers and said, oh, your sales are going down, I'm running away, I said, why are your sales going down? Why did you lose revenue this year? And it was just a restructuring. So I said, hey, this is fine. I'm going to buy Upwork below market value. I bought Upwork at $8 to $9 back in the fall of 2019. And now Upwork is at $18 plus. I'm up 86% today when the market is down. because I bought when everyone else was running away. I ran towards the sale. And I asked the clerks, I asked the sales associates, hey, what's going on here? Why is that big crowd running away from you guys? And they said, well, they're fearful when everyone else is fearful, so they ran away. I'm glad you came around, Lincoln, because obviously you practice the bull mentality. You think for yourself. You understand what's going on. You take the time to analyze things. And so you came and you saw, hey, we're just going through a restructuring. And you said, hey, I'll buy some of that. I'll take some sales. I'll buy $1 for 80 cents. Same thing for Jumia. Jumia was down because of scandal. And I looked at it and I said, hey, this isn't a big deal. So I bought Jumia $8. And then Jumia became popular again because the crowd said, hey, it looks like it's going up. Let's run back to it. And they came chasing. And they chased Jumia up to $20 per share. I could have sold, but I said, hey, I'm a long-term investor. I'm just going to hold it and dollar cost average down when it goes back down. And lo and behold, it went back down and the crowd ran away. And so I bought some more. And Jumia today sits around $15 per share. And I'm still up 58%. Even when the market is down. Even when all the equity markets are suffering, I'm up 58% because I buy and I hold through the ups and downs. And then through the ups again, and I benefit from the appreciation of the value of these assets. That's how you win on the stock market. That's how you give yourself the best chance of success on the stock market, right? And I've done this over and over again. I bought Cloudflare after its IPO when it went down more than 15%, and it was at $15 per share. And I bought it at 30, and I bought it at 50, and I bought it at 58. And I'm going to buy it where it is right now at 52. I'm up 43%. I buy consistently in companies that I believe in, and I have a long-term plan, and I have an emergency fund that can last me 3 to 8 months. So when things get bad and rocky, I can hold on. I can get through the turbulence. That's what you have to do. You have to plan for the long term. You have to have conviction in your investments. You have to buy and hold. Because if you try to time the market, you're going to get burnt. You're going to buy high and sell low because you're fearful. And then you're going to buy high and keep buying high and then lose your money when the market goes back down because you were greedy when everyone else was greedy. You were buying into hype. You were buying on FOMO. And that's psychological. It's hard to get over that. If you build a habit of following hype and acting on FOMO, you're going to continue to fall into that trap because that's psychological. Breaking a habit takes a lot of work and effort. So start building a habit now of just buying and holding and then dollar cost averaging down or dollar cost averaging up. Because if your stocks are going up, that's a good thing. You want your stocks to go up over the long term. But when they go down in the short term, you have to be ready to buy more if you want to, if you believe in this company, because you get to dollar cost average down. And that's what I do. So I bought more SBE ChargePoint this week. I bought more IPOB Open Door last week. If I had more money, I would buy more Jumia. I would buy more Cloudflare. I will buy more Upwork and try to get each of them to 1,000 shares. So yes, I've lost $32,000 in the last 16 days. I'm fine. I'm not near retirement. I don't have any reason to need this money. I'm still young. I still have a job. I still make enough money to pay my expenses. So there's no reason to be fearful and take my money out of the market. Unless the internet blows up tomorrow or the US government completely fails tomorrow and the US dollar becomes worthless, the markets will be fine in my opinion. Of course, I'm not a financial advisor, so none of this is financial advice, but I'm just someone with some senses. Just an engineer, just being reasonable, being logical. The chances of the greatest economy failing tomorrow is pretty unlikely. And if it ever does, we'll see it coming and we can react then. But right now, that's not the case. Right now, we're in a pandemic and things are not as they've always been, and we have to react to that. But regardless, we have to have a plan for the long term because we've seen the lost decade. The stock market may not go up for a long time. We could be in this slump for the next year, 2 or 3, maybe 10 years, right? Things can stay bad for a while. So you have to be ready for that. So in closing, this is all fine. And I will be here practicing the bull mentality and holding on. And I predict the market will go down even further. So I'll buy some more on Friday. And 2 weeks after that, I will buy more because the markets are going to stay low for a while. And if they go up, I'll still buy more because investing consistently is better than trying to time the market. Time in the market beats timing the market. So thank you for watching this video. If you enjoyed it, like the video below, subscribe to the channel, hit the notification bell, and comment below what your thoughts are on the markets, on the election, on SPACs, on what's going to happen after the election, on what's going to happen around COVID, and what your concerns are, and whether or not you have a plan to get through it all. And if you don't, you need to get a plan. You need to be ready for things to get worse before they get better. And if you want to help the channel grow, then join us over at patreon.boacademy.org. You will get more access to me and get direct answers to your investing questions. And you will get more frequent updates on my portfolio and see the stocks and SPACs I'm watching. And you will get to engage in our Discord channel where we share resources and knowledge to each other to help one another build our wealth over the long term. And you will have a chance at winning $200 every month just for being a loyal and engaged patron. So I hope to see you over in the community over at patreon.boacademy.org. I'm Lincoln with boacademy.org. Thank you again and have a great day.